Hey, what's going on, guys? So, I figured I'd give you guys a quick little update on the last part of the short that I'm watching. I figured that this part of the short could definitely be one that is a little bit more on the risky side. So, we're going to talk about the window. We're going to talk about a little bit of data. We're going to talk about the economic calendar and basically what I would be looking for to happen within the S&P chart. As of right now, we don't have the signal, right? And it's very important to know as a trader whenever you don't have a signal and you're kind of just stepping into a freight train, or if you're actually finding that signal and you're finding very good objective risk and you're taking on a well measured trade that is worth your time and worth your money and worth your mental capital, right? We don't have that yet, right? So, whenever we are looking at the market right now and we're looking at the individual tech stocks, we're looking at obviously some of the tech leaders as of lately. We have a decent basket of names that can revert to their gaps, right? Obviously, Apple would be one of these where I talked about this being in later stages of its distribution within the weekly chart, right? And this has been a big underperformer, right? However, what we do have here is potential for this to revert back into 215 to like 224-ish, okay? We have NVIDIA, where it's peaking out of its left shoulder and its preliminary level of distribution. This is why the head and shoulders model sometimes plays out, is because you start to get the redistribution off of where it initially was starting in terms of the preliminary signs of distribution, which was throughout the July yen carry trade, and we're now pushing back into the deep sea gap, which is up here. This is going to be a focus of mine. This is going to be something that I will be watching as we move forward into the smaller time frames. But what I'd be looking for would be like looking towards that earnings territory high, as well as just looking at the opening print of that area, right? The high of day of this range around the opening print, around the pre-market high, just that cluster of an area to really look for a sign off of, right? And then obviously this one would be potentially a short side trade on the, if you would take a look at the hourly. If this were to put in some sort of buy climax or a failure over the top, I think that this one could pull back down and it could eventually reach all the way down into 131 pretty easily. Obviously the signs have got to be there, right? And another thing that can really affect this one would be AVGO earnings, right? So we have AVGO, we have the earnings report or I'm sorry, we have the earnings report Thursday and after hours. So that's going to be a very important report here for the rest of the chip sector. We go over into some of these other tech stocks. Obviously, Amazon, it doesn't really have the worst look in the world, not the best look. It's kind of a neutral based look. There's a really nice structural consolidation that is showing off of the 200-day here, and a really nice huge gap up whenever the market recorrected, and it gapped up into May 12th. If you go over to the market, there was a really nice gap up of about 3.3% within the S&P, and that's what we're defending right now in terms of price action, bouncing off of the 200-day, sweeping into that gap, and then pulling its way higher. So Amazon was kind of one of the leaders amongst the all of the Mag 7, right? And then we also have some other names that have been relatively weak, like we already talked about with Apple. We also have Google that has been relatively weak in comparison to the rest of the market here. We also have Meta that has had a lot of relative strength behind it. I definitely got to clear out some of these charts because they're a little bit old, but it's kind of the similar structure to the S&P, kind of defending these gaps. Stocks that are gapping up and showing a lot of relative strength on those gap ups, like Amazon and Meta, and then obviously those same basket of stocks seeing the continuations off of those very strong gap ups that were showing outlier strength, right? So with all of that being said, guys, I would say that as of right now, the short side trade is not necessarily off of the table, right? It's not something that I'm just going to abandon immediately because we finally made a new high ever since May 16th. It actually only took buyers however many days, 15 days total, and 10 trading days. So there's not a lot of progression and a lot of separation created from buyers just yet. And that's basically what we have to monitor and wait for, is the level of separation that is created off of basically the ES high slash basically the ES high, as well as kind of around that that top that was formed here on Thursday of last week, whenever everyone thought we were immediately shooting to all-time highs, and then we obviously fell into the next following day's open being quite lower, and then obviously the blood that we caught for the next following session and a half here to end off the short, right? So we closed out all of our shorts after like this drop, and that was a really nice look. I covered a little bit more throughout the morning actually, so I didn't quite catch the whole entire move, right? Like that happened all the way down into, where would it be, 586. So that's that, but we'll cover the S&P chart now. We'll cover a couple individual tickers that I have been eyeing up. Ford Motors is one of those, right? I'm definitely still open to the long side. You guys got to remember, this is a window trade. I've never said anything about, oh, we're going to get a straight shot all the way back down to new lows from May OPEX. No. No, 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 no. It's a window trade where you have a window from May OPEX through the expiration of that next following, or the same week's Wednesday, the next following week's Wednesday, which is, bringing additional weakness. And then you want to see if that follow through takes place before Vana charm flows and new monthly flows return into the next month. So we're in the new month. We obviously have Vana Charm returning in their strong state, starting June 9th and carrying on throughout, your midway point throughout June, and those can continuously stay strong into the end of June, right? Because this is also a quarterly OPEX window. And not that it necessarily matters in terms of looking for, a super strong breakout to the upside, and that's why the market will get a little bit difficult. I'm just saying as if, you have a lot more in your way, and the probability of particular outcomes lessens as we move forward, right? That's a very notable thing to have and to know, right? So this was all just a really nice structural pullback, right? This was a very big extension away into May OPEX. It was the perfect opportunity to be short, and we caught this whole entire move, right? I mean, this was a really nice move from the high to the low. It's about $20 on the S&P, and then from the low down here to the high over here, it's about 21 bucks. So we caught the smoothest move of them all, right? I mean, because this happened in 6 trading days, this happened in 4 trading days, right? And this was really easy, really stress-free for the most part, right? And then what happened was we pulled back into our 921, we pulled back into our 200-day, and we successfully swept the NWOG from May 12th, right? And that's a very, very important topic to discuss, because you have to think there's going to be a lot of buyers off of this candle. There's going to be a lot of buyer stop raids on a sweep into that gap. And there's also going to be a lot of shorts trapped whenever they're shorting the hole into that gap. And then it squeezes its way back to the upside. And then you obviously get higher lows subsequently with, shorts underwater, right? And that's what's kind of been happening as of lately. This is why I've been covering my short, and this is why I covered a lot of my short last week. So 2 successful shorts, I have no problem with trying a third time. Now, what I would like to look for the third time, what it would be, guys, it would be a weak amount of expansion away from the level that we are currently trying to base off of into the close from today, right? So this was the Moody's high. Another area that I have that to keep in mind of would be right around here at where we were initially looking for lower highs off of, for this to then be some sort of breakout failure. As you guys can see, the amount of internal resistance created off of this 592.58. Basically, if you would like to see some sort of range UTAD and a big breakout failure, then what you would want to see would be either a gap up and a fade, or just a flat open and then data marks us back down. But preferably what I would like to see, guys, would be the UTAD playing out on a regular trading session time frame, right? This is why I didn't hold a lot of relevance into, potentially taking profits way later and way lower, is because this was, technically a UT for the time being, right? But it's a after hours at late at night type of UTAD. The whole purpose of a UTAD is to catch a, a lot of the dominant side of the trend off sides, and then they liquidate aggressively, and those lose levels, and then subsequently to that, those levels that are trying to be rebid are then not rebid. They are failed, right? And then you obviously get your blood all the way back down to the downside after your LPSY, after all of your corrections to the lower extreme supports, and then you build a path of least resistance to the downside, right? We already have the path of least resistance to the downside. We already have our potential with, the phantom print down here, the ghost wick, I should call it, into 579.16. If you guys go into the regular trading session, you could see how 579.16 is a spot in which we could obviously pull to. And then you could also see how the top of this gap has a path of least resistance already built off of 586.07. There's no supportive data in terms of looking at the dark pool. I'll pull up the dark pool and we'll take a look at the data. And I do want to obviously warn you guys that we have the June flows. They're coming, right? They're coming, and we're not seeing signs of any sort of really dominant seller, right? We got one print today, which is not anything even remotely relevant here, down into 590.3. And as you guys can see here on my dark pool dashboard, we completely absorbed all of the dark pool sellers throughout the entirety of the range, right? So, there's not supportive data of any sort of move to the upside. And you guys could also see how there was a billion placed on the dark pool here. A lot of these other levels and orders are absorbed, right? But there was a billion placed at 590.1, and that is a very, very rather large order, as you guys can see, relative to the rest of the amounts, right? And this was also May 30th, right? So we go over to May 30th, and this was placed on this trading day right here off of 590.10, right? So that was kind of like a support resistance flip off of that area. We closed above that order and pushed through it the next following session, which was Monday, technically yesterday. So all of this together is really aligning for a potential rally or just a stair step higher before we get some sort of bad news, whether we get some sort of event, or like maybe CPI, or maybe even the data end of week, something that can get us beneath these levels that I'm talking about, and that could be the icing on the cake for us to potentially go see down to 579.16, right? Because this is a level that Phantom Prints came through on Black Box stocks yesterday, and as well as just our Ghost Wick that we've been seeing for longer than what those Phantom Prints even came through on, right? So that's definitely something that is alarming to me, and that's something that I will take note of as I move forward, potentially looking for a long side position. A few long side positions that don't look too shabby would be like, obviously we have, I'm sorry, that's not the right ticker. We go over to like FSLR. We have huge volume coming off the lows. Volume kind of drying out. Really nice red to green move today, closing back above this really large gap. All of this looks pretty solid in my opinion here for a long, and maybe an accumulation that is building out throughout the summer. That's why I said you don't have to necessarily force your long right now. You guys got to put into perspective, the short side trade has been just as successful as the long side trade as far as like the indices go and as far as being a stock picker goes, because there has been quite some turbulence between a lot of these different tech names that have not really seen any sort of momentum, and I'm sure a lot of people have been chopped out of them. Names like Tesla, you have names over like Amazon. A lot of these names are not trading well, and it's more of just the overall full equity market kind of just agreeing together in one piece with no weakness really anywhere that is relevant, right? So I'm not mad that all we've really been doing is, picking apart the market in a few areas to be able to short. I feel like that would be one of the better ways to trade it, and vice versa if you want to look long, right? The bias did not really matter after May OPEX, as long as you're not dumb enough to, catch fills up here and then, you stop out of your long and then you just keep buying the dip until it finally bounces in a point where structure makes sense for things to bounce off of. If you're that kind of long side trader, then I can't really agree with you on that, right? But as far as the long side goes, and in the in basically the opportunity that we have seen behind it, there hasn't been tons of opportunity for multi-day movers. I really haven't been intraday trading, and I might have to switch back to that. That's something that I'm pretty good at and something that I used to specialize in. I've kind of just been more in my swing game as of right now, but there really hasn't been any true opportunity just yet. And that's why I want you guys to understand that, like, it's okay if you're just sitting patiently and waiting and watching, because there's no standout name, right? The few standout names that I've been talking about have kind of already played out. And the few standout distributions are in the midst of playing out, right? And they haven't found their full phase where you go, oh shit. There's not any oh shit moments within the distributions that I have had ideas on, right? Palantir, for example, we never got our UTAD above this high just yet, and we're kind of trying to build out something that is, climbing its way higher and slowly starting to exhaust, but that could take longer than what you think would be irrational, right? Or longer than, yeah, what the market will stay irrational for longer than you would even think or expect, right? That's why I'm saying don't front run the short. Don't start trying to front run a lot of these distributions. They will scream at you whenever they are there, and that's why it's very important that we are preparing for this kind of stuff right now, guys. So, not all of them are going to work, but a solid handful of them will work, and I do think we are going to get another opportunity to short things down to that 579 spot. If you guys go to the NASDAQ, what we have over here within the NASDAQ would be, a target down into 509.29, and we still have a very large gap down into 501. And then we have an all-time high potential UTAD sweep that is slightly diverging away from the S&P. Not that far away. I mean, with the NASDAQ, if tech wants to carry its way higher and maybe Apple wants to participate, maybe Amazon wants to get going a little bit, maybe Google wants to get going a little bit, then we'll get up to that all-time high within the NASDAQ within no time, right? No time at all, okay? So it's very important that we just wait and sit patiently. As far as the NASDAQ levels go, guys, obviously this UT up here is going to be something that is very, very, very important. We actually close slightly above that leading into data tomorrow, or not tomorrow, I believe we have data Thursday and then into Friday. And we have a very large amount of resistance that has been built off of 522.29, right? So we reclaimed that, we based that today. We had a continuation above this high today. And now basically what we're looking for within the NASDAQ would be somewhere around this high a day, right? Somewhere within, this session over here. I mean, this was all the way up towards 530.74. We go back to the regular daily chart here, and we could see how we have 530.74, that's nearing that all-time high territory, right? So we'll just wait and see. I would still give this the weekly candle close just to see if this were to be a reversal bar that sweeps out all of these highs, gets a fake breakout above this 3-day or 3-week cluster of price action happening, this coiling action happening. And then that would probably likely result in a straight shot back to 579 easily because they've been building orders there. There's a path of least sorry, I have hiccups. There's a path of least resistance that is built slightly above that into 586. And like I said, the data is not supportive through the dark pool. It's not supportive of being short right now and being short with a lot of confidence, a lot of conviction, and a lot of size. As far as other long side trades go, I would be open to potentially trading Apple. It's been relatively weak. I would be open to potentially trading some of these other names that have been kind of like the retail favorites. We obviously have names like MSTR and like the crypto crowd, Mara. We have Mara. I'm not a big fan of these at all, right? Don't get me wrong, but we do have reliable risk levels within charts that look like this for at least just common positions. It doesn't have to be an options position. We have MSTU slash MSTR with a really, really interesting looking daily chart here, or I'm sorry, a weekly chart here, where it's kind of consolidated here for the past 4 weeks. If you guys go into the daily chart, you'll be able to see today how it undercut the 9 and 21 and rallied off of that today. Maybe that would be a decent little trade intraday wise. I mean, there's some names that you could scalp for decent like momentum, but I'm not really too focused on that just yet, just because the basket that I like to trade has just not really been in anything that has been super, super great areas, right? And they haven't honestly been trading that well. Um, as far as the growth basket goes, as well as like some of these other areas of the market, they haven't really been that great either. I would say that your best opportunities could potentially be within crypto. They could be potentially within like some of these other names that have very, very monstrous pegs that are in their stage 1, stage 2 bases. DocuSign is a interesting chart with an accumulation built beneath from underneath. And this one has been holding up really, really well off of this really big peg candle right here, right? Really nice base down here and an opportunity to get in around that 85 spot, now at 91, right? You can see the volatility has still remained very, very strong over here within DocuSign. Within Ford, I mean, you could clearly see the accumulation building out here on this weekly shortening of the thrust. We have a very large bear gap to reach above us into 12. There's obviously other names that have been absolutely absurd. You have names like Etsy that have been in this shortening of the thrust for weeks, right? Years, honestly. And now obviously finding a little bit of momentum and almost like a dead cat bounce on the weekly chart. So there are going to be names like this that lag behind and end up showing off what they can do, right? And that's why I'm not worried about, there's always going to be an opportunity in the market, and you don't need to worry about catching, what are we looking at here for the S&P? You don't need to be worried about catching uh, the S&P and all of the sectors being strong on a 3.73% bounce that was pretty sketchy in between, right? That's all I'm really trying to say, right? So there isn't really anything else that I can talk about right now. There's obviously some other names that look really nice, names that I don't trade, names that were brought to my attention from other people. You have names like MU that were solid for the bear gap close. It's not anything that I really care to trade, to be honest. But it definitely is not a bad move, right? And there's names like that are just now getting started when you're looking at this and you're zooming out into the weekly perspective that what's really going on around here, right? So that's all very, very important. Um, and I will be probably scanning the market if I really like the upside potential here moving forward, and we can look at some names that look really, really nice for a long. I don't think that there's anything else other than the names that I'm mentioning right now that look good at the moment. So give it a little bit of time, be a little bit patient, and don't abandon the short side trade just because we made a new high and it took us forever to make that new high. New highs have to be met to catch the counterparty offsides, or I'm sorry, the dominant party, right? The counterparty sometimes plays into those new highs and they agree and they kind of simultaneously sell together to really, really build up a campaign to trap the dominant side, the side that is you know, the popular side, I should say, which would be, buyers. So, um, yeah, 579 remains the target if we were to catch another really clean looking entry on the short side. So yeah, with all that being said, if you guys have any questions, feel free to ask me. And I'm going to be patiently waiting here for some of these long side ideas into June 9th, June flows returning.